Good evening, good morning, wherever you are. Hello, everyone. Hope you're all doing well. Welcome to another episode of Market Minds FX, charting your path to trading excellence. So, today, as always, we'll go over the GBPUSD pair, one that we've been charting for the last few weeks, almost 2 months now. And we'll go through and see what's happened. Let me know what you guys think of the new name, of the new logo, of the new slogan. Let me know what you think. Yeah, give me some ideas if you think it could be improved or if you like what it is. I quite like it, to be honest. I think it's a nice little design. But yeah, let's crack on with what we're here to do. Okay, so let's go max full screen mode. Okay, so as you can see here, this is the GBP USD. We're at $1.30. Today is the 18th of July, and almost coming up to 1 a.m. UK time. Okay, so, oops, let's put it in there. I think that's a little bit easier so I can see all the pane on the side. So as always, let's start off with the high time frame to see what's happening, see where we are and where we're going to. So on the monthly chart, as you can see, we're still in that downward slope and we've come up and retraced a little bit. So if we put our monthly chart on, monthly time frame, and as you can see, those are our monthly levels, and we've just, you could say, potentially hit that monthly level, but we haven't actually. When we zoom in, you'll see that we haven't hit that monthly. We almost did, and we sort of rejected off that, and we're headed a little bit down, but still, we've had 2 months of solid green pumps. And yeah, because we're middle of the month, nothing more to put on. Let's do weekly. I mean, theoretically, we do have this monthly up here, or this one here, but I'm not marking them on, and you understand my reasoning why. Okay, let's do weekly. Okay, so as again, weekly last 2 weeks have been really bullish, really pump, and we've sort of have a little bit of downward impulse starting, you could say. Any other weeks to put on? Not really. We've got that week there that we've already sort of plotted, and we've got a monthly there. So this is the weekly we just open here. I don't think there's any point in putting it because we've just got that monthly up there, which is a lot more stronger. And you can see that monthly is resistance, and then we dump back down. Again, resistance sort of level there. So I think that's a solid monthly level that is providing a lot of resistance. And daily level, let's have a look at that. Okay, let's move that out of the way. Daily to put on, we could label. Let's get the horizontal array. So we've got the one that we just sort of closed. Well, yesterday's open, so I think definitely we can put that one on. It is a new daily. Okay, and this one again, because it's so close to the monthly, I don't really think there's any point in putting that one on, to be honest. And personally, I doubt we'll even go that high, but yeah, we could. So, but yeah, we can draw that on, I guess, because it is a fairly newish level. It still adds to our confidence. Should we get back up there? And below us, we've got this daily here. Apart from the weekly that we've got there, but which we have just pumped through it. So, but it could still work as support, turn into resistance. There's no reason why it can't. And then we've got this daily here. And then we've got another daily here, but again, this is so close to the weekly that we've got this weekly level that you can see. There's resistance, and then we went through it, retested it, closed above it, and pump back up. So the reason why that's important is we can come back down, hit it as support, go back up, go through it again, turn it into resistance, and go back down again. So that's why, rather than that daily, I'd say this weekly is probably more of an interest level. But in the meantime, we've got this daily in the middle, which we can still add on really. I mean, it's still a level that we can use for intraday trading as well. Okay. So these were our high time frame levels that we've drawn on there. Let's put these into our daily level charts. As you can see, we've got the ones below that. These were the new ones that we've drawn. Okay. I may remove some of them as we start to get down there, because some of them have been like, gone through quite a few times and they're no longer valid, but we can always do that later. Okay, so let's put that. Okay, we'll do that later. So those are the daily levels. Now, excuse me. So the question was that why do I think we're going down? Why do I believe that we're going to go down? Well, if you remember last week before we had this massive uptake, so last week we were, before we even like done this, so we were literally over here. And you remember I was mentioning that we've got the 1.30 and we've got this monthly 13145. We may front run one of these two levels and come back down. And that was all based purely on the Elliott Wave impulse and retracement. So basically the Elliott Wave count. And as you can see, so I went through it and I told you how this would be a wave 3 and how this was an extended wave. So it's basically 1, 2, and then 1, 2, 3, 4, and then 5, all the way down like that. So, so 1, 2, and then you can see 1, 2, 3, 4, 5. That's the extended Elliott wave that we've got. And then from there, we've started the wave 4. And my theory was that wave 4, well, Elliott wave theory is anyway, that wave 4 cannot go into wave 2 territory. Otherwise, it invalidates the Elliott waves. And that's exactly what happened. So I was telling you, I was saying how, we could hit around this level and we would not go above it. And that's exactly what happened. And at 1.30, 1.31, people were very, very bullish. They were like, yeah, we're definitely going up. We're definitely going a lot higher. And I said last week, that was going to be our maximum ceiling. Well, that's exactly what's happened. We've hit 1.3, what was the highest we hit? 1.31418. And we've started to head downwards, and we're already at 1.30. And I drew this line here. Which one was it? Yep, that one there. See, that is basically the ultimate highest level they can go to. Otherwise, before it invalidates our Elliott wave theory completely, and then we'd have to look at something else. But if we go daily, let's go a bit closer. You can see what I mean. That was our level, and it's literally hasn't even hit the monthly. We had a little bit of space above it, and then below that, it's come back down. And it's following the Elliott wave theory. And here everyone was, and remember, Elliott wave is based on psychology, that when everyone starts to become really, really bullish, then the market heads the other way. And it's based on human greed, that the market makers, the people with the big, people who have bought down here or even down there at the beginning. So how it works basically is that when wave 4 started, which was a retracement, or any wave really, is that in the beginning is when the really good traders, or if you want to call them institutional traders or whatever you want to call them, the really good traders basically, that's where the way I see it, they would have bought down here when everyone was really, really bearish. And then when we get to about here, everyone's starting to become bullish, say, like, oh, we've had such a pump. We get up near the end of the wave, and everyone, like even your retail traders, are bullish. So you imagine when it hit $1.30, even the average person who's going on a holiday or just going on a trip or does a small amount of business would be like, oh yeah, the value of the pound is so high. It's $1.30. This is amazing. We should get some we should buy some dollars because they're so much cheaper compared to the pound now because that $1.30. So these people at that time are then not only they starting to sell the pound, but other people are starting to sell. Those people who bought it down here or for profits are starting to sell the pound as well. And then in the reverse, people who think it will go even more higher, a lot of retailers will think, oh, we've hit $1.30, we've broken it, we're going to hit $1.32, 34, 36, $1.40, who knows? That that FOMO theory, that fear of missing out, that it's pumped so much, it's going to pump more. Let's buy some pound. And again, what's going to happen? People start taking profits, the people who bought really low, and the market starts to head back down. Like even now, people are still going to be bullish. They're like, oh, it's a good place to buy because there's a bit of a retracement. We're going to go high, and what's going to more than likely happen, in my opinion, anyway, based on the Elliott Wave theory, anyway, is that we're going to start heading down, and then these people will be like, oh no, it's just a minor dip, it's going to go back up. And what happens? It goes down and down and down, and before you know, they're all in underwater, and then they're going to sell at a loss. Just pure human psychology and greed, basically. So anyway, that was a bit of a psychology background, but here we are. We hit almost the monthly. We front run it basically. And if we go in a 15-minute chart, I can show you exactly what happened. So as you can see here, so we hit this one here on Friday at 4:30 in the morning. We hit $1.31418, and then around 10 o'clock UK time, we hit $1.31417. Remember here, 418, and then here we hit 417. Literally 1 point below the previous high. 2 points more, and we could have broken it, and we'd be like, okay, well now we made a high. But no, just the way the market works. So here we hit 402, 402, 418, we hit 417, and a retracement. And I took a short when I saw that it hit 417 and started rejecting. So I think I've got the short from here. Got in from about here. I think 131.40 actually. I think I got in. No, sorry, 131.340. There we go. Yep, I got a short in here. 131.340, just about here. And afterwards, the rest, as I say, is all history. It just turned from there, and then you can see we made a little bit highs. I'm just headed all the way back down, really. And if you look at it in the 1 hour chart, it makes a lot more sense. As you can see, what's happened since we hit that 131.417, we've just, let's put it down so now you can see it. We've hit that 131.417, and look at that. We've just, you can definitely say it's change of market structure, and we've just made lower lows, lower lows, lower high, lower low, lower high, lower low, and potentially even more lower low. So the next question is, where are we heading to now then? Now that we've potentially had the change of trend or market reversal, how low are we going? And if we look at the 4-hour chart, which sometimes gives you a better view, bird's eye view, or zoom out a little bit just to give you a better understanding of what's happened. Look at that, we've just hit that, we've hit that zone, and we've come back down. Now, question is, how low? How low do we go? So I think it's too early to say where wave 5. So now we're technically hitting wave 5. Now wave 5 can be usually is either within in a high time frame. Let's go out a bit just to show you. Even weekly actually probably makes it easier to sort of explain the concept. So wave 5 is, generally speaking, it can theoretically you have wave 5 that even goes even lower than wave 3, right? In some instances, it can just fizzle out and go around here, like sort of not even break out the highs of, or in this case, the lows of wave 3. But generally speaking, you'd expect it to break below the low of the wave 3, right? That's what generally you would expect. However, it's too early to say. I mean, it could take a long, long time. This is what, October 24. But we'll use some fib time to work out where it could be. You know, does it do this? Does it do this? Does it just fizzle out around here? Yeah, we've got a long way to go for that at the moment. So I think it's a bit too early to discuss how low it'll go in that essence. But genuinely speaking, wave 5 can be extended. So we could have like we had wave 3, which was extended. We could have wave 5 that was extended, which would mean a lot lower. Which I was talking to a friend of mine the other day, and I was like, well, the pound's at $1.30, and this today we're like July, and we were lowest at around in September 2022. Now, how have things changed so much in the last sort of 9 months that, or 9 months, 10 months, that the pound is increasing 30% in value, roughly? Has it really? Have things in the US got so bad compared to the UK economy? No, absolutely not. My opinion, they're probably about the same, or maybe the UK inflation is higher, interest rates are higher, the economy is not growing as much, etc. And that's why one of my other confluences was, if you look at the general dynamics, was that, in my opinion, at $1.30, the pound is overvalued. And this is why it needs to retrace. Okay. But I will look at wave 5 in more detail next week once we have a clarity of what's happened and we have better data. Then I will go through and explain where I think wave 5 can potentially hit on the longer term. But in the meantime, let's go back and see what we can work out in the shorter term. So actually, I'd like to go with a 4-hour chart. I always find that easier. Okay. So we've head back down, and already we can see some sort of, we've got a weekly here. We can turn on dailies as well. Okay, so that's the dailies there, and the new ones that we marked are here. And that's it, and this one. Okay. So you can see these are the dailies above us, and then we've got the weekly below us, and we've got this daily below us as well. So I'd say this weekly is definitely of interest, simply because this is the one that we sort of turn into. We just went through it, and there's potential that we could retest it. So if I was to look for, intraday long, I would like to see it come this level, have a reaction, perhaps go through a little bit, start to go back up. Then I would look to take a long for this, at least back up to this daily here. I think that would be my theory for that is at least one confluence for an intraday trade. So which means like a short sort of scalp really. In terms of long, like better support. Okay, let's go. Okay, so we've got the 0618, 667 level around here. But we don't really have a weekly there, to be honest. We've got daily here. Okay. So you can see this level here that we've dipped into. We've turned into a resistance, gone through it, retested it as support, and gone back up. And then if we put in our fib retracement, you can see that's coming up to around the 618. So that I think is a good value, a good area of interest for us to take along if and when we get down there. Well, in my opinion, when we get down there, not if we get down there, but when we get down here. So I think that's starting to look at a better level. If we look at remember we had a 4-hour trend line. We've broken above it. Oh, look at that. So this line here that I just mentioned, what is it at the top of? The 4-hour support line. So again, another level of confluence, also again with this level. So now if we put our retracement in, wait, we already have that, sorry. Yeah, this one wasn't it? Yep. Yeah, no, not this one. Get rid of that one. Get rid of that one. This one up here. There we go. So we've got the 4-hour trend line, we've got the daily, we've got just below or just above, but we've got the 618, and we've got this 4-hour trend line. But I think even better will be the we had a daily trend line, didn't we? Oh, there we go, daily trend line. That's a lot higher as well, to be honest. But yeah, again, this level here as well, the weekly here. Sorry, the daily level here is also in confluence with the trend line, the daily trend line. So let's get rid of this retracement. That's causing a lot of issues. So as you can see, this daily trend line that we drew from a while, we've gone above it. Again, almost touched it as support really. But I prefer the 4-hour trend line, to be honest. I think that looks a lot better. So yeah, so around this level here, the 1.29, I think would be good for a potential long setup all the way up to the weekly, perhaps even the daily, just to stop out all the early shorts, and then head back down again to the bottom of this 4-hour trend line. And I mean, over here is a lot of support, as you can see. We've got the weekly, we've got the daily level, and then if we were to do the retracement from all the way from the bottom of this huge pump, if you look at that, so this level here, we've got a daily, a weekly, the 618, 66 level, and we've got also the trend line, the 4-hour trend line support as well. So this at 1.28189 is huge level of support if we were to get down. And also the fact that you can see we've gone up here, it was resistance, went through it, went down, went back up again. Didn't really test it as support. We tested this level as support really. I know it's a bit messy today to see exactly what's happening, but let's hide the dailies for the time being. So if we open up the daily trend line, it's pretty much the same really as the 4-hour trend line, but this trend line, and then if we do the retracement from the bottom of the 4-hour trend line, you will see that our 61866 level are around here, and we do have a daily there as well. Yeah, and then the maximum is the 07 level, which you can see we sort of resistance, went through it, retested it, and then went back up. So potentially if we come down here, so if we head like this, and then we come all the way down here, I think this level here is of a highly importance because we have so many quite confluences at the bottom of the 4-hour trend, 6.6 level or 0.7 level, this level here, this sort of resistance turn into support level. So I think this would be a very good area to look for a long, potentially to back up, perhaps even to the weekly up to 130, retest it, and then head back down again. So yeah, that would be a very strong level to do a long. I remember these are, overall I'm bearish. I believe it will head to back down, but we can still have a nice healthy go back up to 1.30 level and go back down again. So these are all trades that we can take. And then just to add a bit more confluence. So that Elliott Wave count that I did seems to be working out really nice with a fib speed resistance, fib fan I'll show you what I mean. Let's go weekly. Let's hide that and hide the weekly and the monthly levels. And just to give you, so that was the daily trend line. This is the 4-hour trend line. As you can see, pretty much similar things. And then I did a fib speed fan all the way from the bottom. And as you can see here, 618, 66 levels are pretty much just above there. And you can see this was pretty much close to the 6-6 level as well. So again, another sort of confluence for that resistance that we had. Maybe look better in the daily chart. Yeah, as you can see there. So this was the level that I drew in terms of Elliott Wave, and you can see it sort of matches up perfectly with the 6-6 level from the speed fan. And yeah, that key area, look at that. Absolute perfection. So I don't know how many other confluences you needed to take a short there, really. Right, so let's go back to our normal intraday trading. So what we're going to do for the intraday, I mean, those were, so I showed you where I would look to take a long, but what about if you want to take a short, because we are at high time resistance, really, aren't we? So as always, what we do is we'll look for the daily open. So for example, now we're at the 1-hour chart, right? And you haven't taken a trade, and you're like, okay, what do we need to do? Want to take a trade. As you can see, we're at a lower sort of resistance level. We're making lower lows, lower low, lower low. And looks like we're making lower lower. So where would we go? What I tend to do is I would draw a trend line. So take perhaps the highest of that. Just draw a roughly trend line around there. And similarly, you could draw one from the bottom as well. Let's move this across a bit. And this is at least on the 1-hour chart. You can do something like that. As you can see, we're just sort of heading downwards. Now, for an intraday trade like scalping, you'd wait to see hit the top of this trend line and then take a short, basically. And similarly, if you hit here, you'd look to take a long, and I would wait like here. I think here we have this speed fan. Again, a little bit of a support level, you'd say, perhaps a bit of a reaction that you would look to take along from here. Similarly, if it broke above this, and I would say this daily is a good level to do a short from, take a short, because fair enough, it's slightly above the trend line. We can always go a little bit above the trend line, so we could do this basically, and then head back down in again. So, and then do that. And again, that adds to your confidence to say, okay, we're slightly above the trend line, and we could, hit this daily, which is resistance until broken and turn into support, and that would be a good way to go down. Or we could always just do this. You can always draw a quick Fibonacci, and you can see the 618 level is above there, and this daily is just below the 0.5 level. So you could wait for it, a little bit of a pump up there, and come back down again. So, and with so for example, this would be a perfect, not perfect, but a decent short, because you would do something like this. You take the short from the daily, right? And your stop loss would be just above this high here, this high, right? And your target would be, even if it was the bottom of this, it should be about 2, still okay-ish, I guess not great. But then you would always head back at least down to the next sort of level, which would be the daily level, or at least the bottom of this around here, which makes it a risk ratio of 1 to 4, or even more down all the way down this level daily, which makes it a risk reward ratio of 1 to 5, which is perfect really. The main important thing when doing trades like that is where is your stop loss and why is it your stop loss? Because you theoretically say, oh, my stop loss is all the way up here. Well, it's not really good stop loss, is it? Because it's huge, really. But when you've got something like that here, because you've got the resistance level, you've got the monthly, and then the daily, and then you've got the high of this little zone here, and you've got the 6.6 level and the 0.7, then you're heading into resistance. And unless it's a massive, huge pump, it's more than likely it's going to come back down from there, right? So, and it's a not a huge stop loss either. So that's why that is very, very important. Okay. So that would be the way I'd see it. Let's go 4-hour chart actually. Sometimes it's better to draw the trend line on the 4-hour chart. But again, it makes no difference because we're just heading back down, really. Let me check anything else. Yeah, just turn these on just to make sure there isn't anything we're missing for our chart. So the other thing that we want to add, as we always do, let's get rid of this retracement, is the daily open. Where is our daily open? Where is it? Here we are. Can't remember the last time. Yeah, from where here we are. Okay. So we need to put this to our daily open, which was at where are we? Turn that on. Yep. So it's just over here. Zoom in a bit. Okay. Oh, I thought we brought it up. Clearly not. Okay, so our daily open is it's 10 o'clock. There we go. Yep. All right. Here we are. So that's our daily open, right? And then we've got to hit our previous day value area high and our previous day value area low. So let's bring that up here. And then zoom in again. Right. This is our value area. So yesterday's low was here. Right. And our high. Where's Mr. High gone? Here we are. Yesterday high was this. Yep. Okay. So we've added those as confluences as well. So we've got. Literally, we can get rid of this daily really, because we've put that as a daily open. All right. There we go. So we've got the daily open here. We've got the previous day value area low, and we've got the previous day value area high. Potentially put it here really. So yeah. So your two levels of confluence are here, which is the daily and the daily value, previous day value area high. So if we head back up there, I think this would be perhaps the perfect short. Yep. So if it hits the previous day value area high around here, take the short. So it does something like this. Right, and then you can take the short all the way to the bottom of this trend line and around the weekly level as well. So I think that would be a really, really, really nice short. show short position. And then you'll, theoretically, you could have the stop at the daily level, really, just above it. And your target is the bottom of the trend line, which is about here. And it's a nice 3.3 risk reward ratio. Or you could keep it just above here, just above the 0.7 level, and even better, almost a 5 risk reward ratio, 1 to 5. So yeah, because you've got the previous day value or high, you've got top of this range, and you've got the daily up here to sort of work out your stop loss resistance, really, up there. So yeah, that's potential. Oh, and that also works out well with your Fibber tracing that we've drawn as well. You've got the 618, 66 level, 0.7 level, all over here as well. So you've got extra confluences to add to this short. And for the long position, oops, I would say slightly more trickier, but you've got bottom of this range, and then you've got the weekly down here. So I'd say to take the long, you'd have to wait, because remember, we did have this sharp pump up, and easily the same can happen, that we can have easily a sharp retracement back to lower levels. So yeah, can easily head back down as well, to be honest, which you may well do. But yeah, for a long, around at least at the weekly, and then for the short, which we've just gone through there as well. So yeah, I mean, the problem Monday evening is sometimes you've already missed the best trade, which was obviously back up there. But those are, you have to wait and be patient for those sort of trades, and wait till the pump, wait to see the retest, and then take the short, basically. So yeah, that's my opinion on this GBPUSD chart. Let me know what you guys think, as always. And then the other chart that we always check is the DXY, because whatever happens in DXY happens to everything else. So as you know, DXY is inverse to whatever's happening in the pound, and you can see this was, well, our lowest point was here, Friday 4:30, which was what you can when we had the GBP, this one, highest point almost. We had a retest around 10 o'clock. What happened in the DXY? That's sort of, you could say, a rough retest, really. And then let's go 1 hour chart, it makes it a little bit better. Yeah, this one here, 10 o'clock, sort of a retest, and then head back up. So DXY hasn't done too well, but as you can see, we are sort of heading back and turning this weekly level into support, which is definitely good news, because if the DXY pumps, GBP will go down as per our theory anyway, or as per our plan. So we've turned this weekly into support, and then if we clear this daily, which we did this morning briefly, this afternoon, but we need to clear this weekly, clear this high, and then we're back up onto this daily at 100.521, which is basically the 100 level, 100 points, and then go back up to the weekly. So that's where DXY should head. But yeah, I always keep an eye on DXY, because whatever DXY does, the GBP does the opposite. So if we start losing this weekly and going there, then potentially we could head back up to this monthly and slash key area. I mean, even now I'm thinking, if worst case scenario, if DXY starts to head down to go to this week daily level at 99.076, we could just head back up here, take out this monthly, take out these highs, or maybe front run it again and come back down again. I still think this is very, very high resistance level. I don't even think we're gonna reach here, to be honest, but just as a worst case scenario, because the market does what the market wants to do. So yeah, That's what we do. And let's have a look at the quick news, see if there's what's on there. Anything exciting happening. So today is Tuesday, 18th of July. GBP 30-year Treasury auction, nothing amazing. Then at 1:30 we've got core retail sales, which apparently should give us some indication of how the US market is doing. Got retail sales as well, but nothing too amazing to write home about. Yeah, nothing too great for USD or GBP. And Tuesdays usually aren't amazing days. Wednesday, a lot of UK noise. We got CPI year on year. That should be interesting to see because if inflation is coming down, then obviously that is meaning that it's unlikely that the bank, well, more chances that the Bank of England may not decide to increase interest rates. However, if this becomes higher, then there's a higher chance that they'll increase interest rates and the pound will be more bullish. Simple as that. And then we've got CPI month to month June. That's always also very interesting, and the CPI year on year. Then we've got yeah, so a lot of UK news Wednesday 7 o'clock. So expect high volatility on Wednesday or tomorrow, basically. Yeah, 7 o'clock. So in terms of where the market could do, so let's go out to the daily level, just to give us a better indication. So let's hide some of the stuff because it's too much noise. Yeah, let's get rid of the trend line and get rid of that fib at the top. So we are over here at the moment in the daily terms. So we have whole of today and then Wednesday. So one option is that we head back down to the weekly, and if it's good news, start to pump up. Or in the back, and the other way is that we head down, retest the weekly when come Wednesday morning, 7 o'clock. Not great news for the pound, and head back all the way down to this sort of level here, this support level here, 1.28270. So that would definitely make sense, a lot of sense. Theoretically, we just go sideways till tomorrow and then head back down. We have some news coming in today, so could affect it. And then Wednesday, euros, so that could affect the DXY a little bit, CPI, etc. for the euro, and then USD, mortgage retail sales, that's mortgage refinance, okay, building permits, gasoline, heating stocks. Yeah, nothing amazing on Wednesday for the US. And Thursday, already on Friday. Okay, missed out Thursday then. So this is, here we are, Thursday. Nothing really for the UK, nothing at all for the UK actually. US continuous jobless claims, initial jobless claims, that's always interesting. So if there's more jobless, if this increases, then that means the interest rates have worked, and it's unlikely that less chances that the Fed will increase interest rates. Personally, I think they will definitely increase on the 26th of July, but potentially the outlook would be a lot less bullish for the US dollar. But if this is low, if this goes back down low again, then there's a high chance that the US will continue increasing interest rates come August or perhaps September. So that will be bullish for the US dollar. Right. And that's it really. There's nothing too exciting on Thursday, and then Friday. GBP core retail sales will give us a good hint of what's happened in June, year on year. And again, if this is, sluggish or slowish, then it will be bearish for the pound, simply because it means the interest rates are, are high enough. They're not increase. They're starting to slow down the economy, and there's less chance that the Bank of England will continue with this interest rate rises. Yep, pre-sales, exactly. That will give us the same information, and nothing for the US. So yeah, that's where we are. So Wednesday, Thursday will be interesting days for the pound and the US dollar, and it will give us a much clearer. I think end of the week we will give us a better idea of where we are in terms of this, whether we're down here or up here and invalidating the Elliott Wave count. It's possible. Who knows? But yeah, I personally think we're going to head back down. But let's see what the week begins, because we're all learning, and this is still, as I say, the market does what the market really wants to do. It won't work on mine or your wishes. It will do what it wants to do itself, and we can only look to work it out and do our best. So yeah, let me know what you guys think. Next week I will concentrate. I will try and do another video on these Elliott Wave counts and see how we can pin it down a little bit more. So I'll definitely, I personally look forward to doing those, but let me know what you guys think and what I should do better, what I've missed out, where I can improve on things. Happy to receive your feedback. Right, hope you guys have a good day and a good week trading, and hope to see you soon. Take care, and hope, yeah, see you next week. Okay, guys, bye.